So everybody's been wrong about the whole tariff situation. It's because nobody understands tariffs, including the media, including myself. I don't know about tariffs. I don't know how it all works. None of us do, right? All we know is what we hear that's fed to us from the media, right? So I know as much about tariffs as you do, as much as the guy on MSNBC or Fox or wherever, right? None of us know anything about it. The only people that really know about it are the people that are actually pulling the levers and, in control of, the billions and trillions of dollars that come in and out of the country. And who the heck knows how it really works? But what I do know is what the reaction of the market is. And traders are smart, analysts are smart. Maybe they know more about tariffs. But every time there's been a tariff announcement, there's been a little bump in the market, but nothing so significant. Where's the incredible inflation? Where's the collapse of our economy? It has not happened. There's been back and forth negotiations. They make fun of him. They call him taco and all this stuff. Meanwhile, we just cemented a deal with Japan that looks pretty freaking good. We've secured, I don't know, $10 trillion of money coming in, which means jobs, which means more building here. Tariffs will have less effect if we're building here. It also puts pressure on manufacturers here. Well, they're going to have to pay more for imports. Yeah, they will. So maybe they'll get it here instead. Maybe it'll be more expensive. Maybe, but less probably than buying it from overseas. Yeah, the EU deal was pretty big. We'll see what happens with China. We just, we don't know. And so for me to make commentary that this is going to happen and that is going to happen and be all like either anti-Trump or anti-tariff or pro-tariff, who the hell knows? We'll stick to trading and just follow the charts. Right, Cheryl? We'll just stick to the charts because I can admit that I don't know about tariffs. I know as much as anyone else in the room, and probably a little less. I do know how it affects the markets. I do know what they say will happen with tariffs that have certainly not happened yet. But the dollar, is a kind of an inflationary measure. So the thought is if Powell does do a rate cut, makes capital more available, more people will spend, that could send inflation higher. And that could be bad for our economy. So some might say if that happens, the dollar is going to drop because foreign investors, they're going to go, you know what, the U.S. economy's screwed. I'm pulling my money out of the dollar. So that can happen. And the reaction could be the inverse. So you just have to wait and see what happens with the chart. So we'll take a look at oil and see if we want to get out of it. We'll see if we want to do some hedging with the dollar. I'll move on. The Russell really moving lower here. That is a leading indicator. So oil going up, dollar going up, yields holding at a high level. Gold, even though the dollar is going up, gold is still going up, or the miners are going up. Bitcoin is kind of holding a level. So not really sure what Bitcoin is doing, but it's just kind of sitting there. So you really have kind of a mishmash. But if I were to look and have any kind of bias as to which way this thing is going, I would say we have a bit of a topping pattern in ES. We have a pullback happening in the Russell. The VIX is strengthening and finding support. Dollar up, oil up. That's inflationary. And I wouldn't be a buyer of options right now, too many of them. So what I'm going to be looking for are some earnings plays and continue to hedge and put some bearish trades on SPY just to see if any of those can come to fruition. Now I do have a SPY trade that's not working. It's $5 off. I got to look at what my cost is to see if it makes sense to roll it another day or two because the markets, this could continue down and then that 630 strike would still work. We have a July 30th one, but we also have a short-term 630, 628. So we'll talk about that. We still have an XRT that we rolled. I still have a straggler call on TSLL. That's flat. That could move. So that's fine. Fine. I've got a long-term silver. Got a put for August 1st on silver. So dollar continues to scoot higher. That might end up in the money. But long-term, I'm bullish silver. We have our IBIT. We're not quite in the money yet. We're a buck from being in the money. That expires August 1st, so we'll stay in that. GameStop never really caught on to the meme thing, so there's nothing there. Copper, I'm still in it. I do have a put on it that's doing quite well, so we'll talk about that. That brings our cost down. And we've got a position on BABA, and that's for September. All right, so let me just check the questions, and then we'll go through these one by one and get some action. What is happening to healthcare is a question. Well, what's happening to healthcare is the dollar. So there is a relationship between the dollar, and healthcare. So as the dollar, moves higher, healthcare usually takes a beating. But right now, this is absolutely not a chart that I want to participate in. Right? You really don't. Not until there's a major realignment. You've got the two. If you just look at the healthcare ETF, you have the 200 period moving average, you have the 100 period moving average, you got the 50 period moving average. These are all inverse. So that's not good. The fact that you've been over the 50 is great, but you've got this resistance of the 100, the Bollinger Band, the dollar strengthening. So this is not something I want to be in. If you want to park your money in some kind of healthcare, I would put it in Lilly, and I would buy shares, not anything else, really. Big techs, you're anticipating a revenge move. We'll see. Yeah, North Guy, it's not necessarily true. I know the thought is that American companies are the ones that are paying for all of the tariffs. And it's just simply not true. It's a lot more complicated than that. It's more complicated than that. And what's happening, I know some manufacturers in a couple of different industries, one specifically in the furniture industry in North Carolina, and they import a lot of materials from other countries that they are buying woods and different materials for their furniture. And the tariffs, are potentially could cause that. It hasn't quite happened yet, but they anticipated, it costing them more. And one of the things that they're shifting is that some of the goods that they were importing, because of the uncertainty, they started looking for other sources in the U.S. And so they have found other, which they weren't really looking for, but they found other manufacturers to buy the products from here to build their furniture here in the U.S. And in anticipation of manufacturers wanting to buy more American-made goods because of the tariffs, those sources have lowered their prices, not increased them. You would have thought that, oh boy, if I sell lumber here in the U.S., I'm going to jack up my prices because I know they're not going to want to buy lumber from wherever anymore because of the tariffs. They're going to want to buy it from me. I'm going to jack up my prices. It's the opposite. They're actually becoming more efficient because of the tax code. Just think of all of the things that affect. Because of the tax code moving forward, American companies have more of a guarantee that they'll be able to keep more money that they make. It's not that certain costs aren't going up. Inflation hasn't gone up the way they thought. Healthcare costs haven't gone up for them benefits-wise the way they thought it was going to go up. Energy costs have come down, and now they're getting more orders than they were getting before because of the tariffs. So that, like my friends in North Carolina, go to some of these manufacturers and go, well, we were thinking about buying the stuff from you because the stuff from China or wherever else we're getting tariffed and whatever, da-da-da-da-da. And they're like, come on in. We'll give it to you for less or, for whatever, right? So there is this untold story that the importers are paying all the tariffs. No, they're not. In fact, some of them are buying those cheap-ass imports and buying them from companies in the U.S. who are actually doing better recently because of lower energy costs, lower input costs. Think about it, lower input costs. So, and no, they don't necessarily pass it on to the consumer either. That is also a misconception. So, and even if they do pass it on, they're not passing on the full amount. It's not like retail goes up 25%. maybe some of the costs go up by 10 or 15%. But they are able to, my father used to tell me there's only so much money people will pay for a hamburger. So the cost of lettuce could go up. The cost of beef could go up. And you could raise your prices because your costs are going up. But the bottom line is there's only so much money someone is going to pay for a hamburger. So you're going to have to find other ways to affect your bottom line, your efficiency, your labor, and your other costs. So to draw, all I'm saying, I'm not trying to give you guys a lesson in tariffs because, as I admitted, I don't know, okay? But what I do know is there are many factors here, and you can't draw a straight line to say Trump put on a tariff. It's going to cost them more money here, so you, the end consumer, are going to get stuck with the bill. You can't draw a straight line. It just doesn't work that way. There are so many other factors to understand. And so all I'm asking you all to do is just be flexible in your thinking about it and watch what actually happens over, a time horizon, not just, well, yesterday it cost this and now it costs this, or I went on to Amazon and that thing that was $2.99 is now $3.49. Like, just use your head a little bit and understand there are many forces at work here. And we haven't seen the full expression of what will happen. The fact that the tax cuts are permanent is a help. Money coming into the U.S. from other countries to build, that helps. And certainly people who are importing are starting to look at, instead of importing their products, getting some of those materials and products here in the U.S. And those U.S. products are coming down because of energy costs coming down and other things. So just, be open-minded to a number of different scenarios. And I don't really know what the end result will be. As far as a trader is concerned, I'm just looking at what do I see on the chart, and trade what I see. I think that's like the smartest thing to be looking at.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.